JJ the CPA here. Hope you're doing well. Let's talk about the employee retention credit. Okay, so what are we talking about here? Boom, talking 50% of up to 10K that you pay each employee when you have the qualifying conditions. Okay, so that's $5,000 credit per employee potential. Okay, so there's a number of rules, regulations related to this, and what I want to more walk through related to this is the calculation of this. So if we're talking about the employee retention credit, okay, what you're going to want to do is go to irs.gov and you're going to go to the search and you're going to go find Form 7200, okay? And when you're finding the Form 7200, you can also find the Form 7200 instructions right next to it. But we're going to be talking about how to prepare it, but specifically if you're qualifying this for first quarter 2020, you'd be able to do March 13th through March 31, and the 7200 is really how you're going to get this because you've already made your deposits, okay? And when you put this in, ching, ching, money's coming right back to you. You fax it to the IRS. And I'll get to the quick of it right now. I mean, who qualified? What'd you pay them? Okay. Times 50%. Does it exceed $5,000 for that employee? Boom. Add up all the employees. There's your number. You're going to go to Form 7200. You're going to put it on line 1, follow the instructions, bottom line. You're going to fax it. Done. Look at that. Under 2 minutes. There you go. Simple. Okay. Now, I'm going to run through the calc with you. I've got on my website, now this one is on my client websites, jjthecpa.com. It's not on the help one, it's on jjthecpa.com. I got a link in the body for you, but what I've got here for you is, so if you go to jjthecpa.com, I've got a playlist, listen to me. I got a page called Clients, okay? And I've got something that says Employee Retention Credit. Boom, click on that. There's not going to be anything you have to enter in to give me your email or any of that good stuff. So what you're going to do here is when you click on it, you're going to enter in the employee's name. You're going to enter in how much they make a day or per hour, how many days or hours qualified, okay? You're going to come up with an amount. You're going to take that total amount times 50%. You're going to total it up. Boom, that goes on line 1. Okay, what are we talking about here? Form 7200, right? Line 1, total retention credit for the quarter. Boom, put it on there. Right down here, right down at the bottom, you fax it in. You don't mail it, you fax it. All right, we're going to walk through, but boom, look at this. Just over 3 minutes. You can take this and run with it if you like. Got the instructions that we can pull together here, but then here's a quick qualifying into 2 categories, okay? First thing I want you to know is that you do calculate this quarter by quarter, okay? This is just IRS, okay? I'm at the IRS website and I just put in employee retention credit and this is where I'm at. So qualifying employers must fall into 2 categories, okay? So the first is that the business was fully or partially suspended by government order due to COVID-19 during the calendar quarter, okay? So quarter 1, we were in it. We're in it for quarter 2 as well, okay? Now, this is one of 2 categories, so it doesn't have to be both. Here's the second, okay? That you're in a situation where the employer's gross receipts are below 50% of the comparable quarter in 19. So that means, first quarter or second quarter, third quarter, fourth quarter. You're looking at it by quarter. So you'd be comparing second quarter 19 to second quarter 18. Once the employer's receipts go above 80% of the comparable quarter in 19, they're no longer qualify after the end of that quarter. So once you're in that quarter and you're hitting it, boom, you're there. So how's it credited? I just told you, okay? It's up to 10,000, 50%. Now check this out. This is like when you read this, you're going to think, what? But employers with less than 100 employees, okay? If the employer had 100 or fewer, so IRS is inconsistent with this little description there, but it's if the employer has 100 or fewer employees on average in 19, okay? So it's based on 19. The credit is based on wages paid to all employees, regardless if they worked or not. If the employees worked full-time and were paid full-time work, the employer still receives the credit. Yo, what? No, that's saying right there, boom. This means operations were going, people were working, they weren't working, they were at home, they were there, they were serving, they weren't. If you paid them, you're getting that credit. Bada boom, bada bing. What? Yes. Now, if you're more than 100, okay, the employers are going to get it if the employee was not working, okay? So you paid them, but they wouldn't work. But on that ERC, you're just getting it. You're just getting the credit. So Form 7200, you're going to go to line 1. You're going to put that dollar amount in. You're going to total it. You're going to fax that puppy in. Bada boom, bada bing. But now we want to look and go, all right, well, let's actually work this let's work this out, okay? So I'll get rid of that line item because this one's for, let's see, edit this. This is just a note for clients. Come on, enable editing. Let's go. All right. Then delete that, okay? So we got Jimmy, and Jimmy makes $15 an hour, okay? And this person worked, so I'm just going to do the math in here, okay? There were 12 business days, okay, times 8 hours, okay? So there were that many. There were 96 hours. This person worked or didn't work, okay? 96 hours. How? 8 hours a day for 12 days, 96 hours. So they were paid $1,440. The credit is $720. Boom, okay? Now we got Sally over here, okay? Sally makes 25 bucks an hour, 96 hours, $1,200 credit. Now you come over here and you've got Rachel, okay? And Rachel makes a daily rate, okay? Let's just, $285 a day, right? Some of figuring out that'd be a salary, right? So 285 times 52 times 5, so 74 grand a year person, right? So that's 12 days, okay? Look. Daily or hourly, days or hours. So there was 12 days that count. $34.20 was paid to him, so 1,710 credit, okay? Then we got Ross here, okay? Ross is over here. Ross makes $250 a day. Got 12 days. There's the credit. Okay, and then we've got Joey. Okay, Joey makes $260 a day. There's 12 days. And we've got Monica. Okay, Monica makes $350 a day, 12 days. Okay, now let's say that Phoebe here. Okay, so Phoebe was out part of the time. Okay, part of the time wasn't at the office, okay? And Phoebe makes $400 a day, okay? Still going to put 12 days. Doesn't matter. Doesn't matter if they're working or not. Gotcha? And then we've got, what's that guy's name? His name's Matthew. I'm going to go with Matthew. So Matthew makes $390, and Matt wasn't there at all the entire time. Okay, wasn't there the entire time. Never came in. Still 12 days. Okay, it was actually Chandler. Forgot. All right, so when we are doing this, we got Janice. Janice makes $26 an hour. Okay, 96 hours. All right, so we got 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, there you go. Going to do credit. I took the math out for what's on there, so no one gets mad at me. Look at that. $14,778. Boom. Okay. That's 50% of what those individuals were paid. Okay. So there's your credit. $14,778. Okay. So you're going to come here on we're going to go here. Okay, we're going to come right here. We're going to put in 14,778, yo. Okay, and we're going to show here we didn't take any of that during the credit or during the quarter. Okay, how could we? It didn't even exist. All right, so 14,778, or technically existed last couple days. So what's your business name? Okay, so this is the business name on the payroll reports, which is your form W3, okay, or form 941. Okay, all I'm saying is whatever name you got on that, that's what you're using here, right? So we got 8 dump, 6 dump, see pop boop pop, whatever. Okay, what's your trade name? Doesn't matter. Now here's the key. You ready? It's going to blow your mind. You ready for your mind to be blown? Okay, put your hands on your head because it's getting ready to blow apart. You have to put check mark second quarter, even though this is for first quarter. Why? They already did the form. They don't have it on there. Period, the end, it says you check that box, period. Okay, if you don't want to check it, you ain't getting the money. This is for first quarter. You're checking that box, end of story. Okay, so you're going to just put in the address, right? There's my address. Okay, 1, 2, 3, 4 address, and here's my city. Okay, I'm going to put my city, and I'm going to put Oklahoma, and I'm going to put my zip, and there's no foreign country name, and there's no foreign this or not foreign that. Now, if you're using a payroll company, okay, you're going to put that payroll company, and then they have a filer number. Okay, you're going to put their number. You got to just call them. Go call them. Okay, most everybody, you're doing a 941. Okay, how do you know? Well, look at what's been filed. Your payroll people ain't preparing this. You are. Look how simple this thing is. You're preparing it. If you want them to prepare it, that's fine. You're going to have to give them the money. Is this a new business that started on or after January 1, 2020? Okay, we are doing first quarter 2020. Here's how you know. Did you file any of these reports in 19? Did you file any payroll report in 19? Okay. If you filed any report in 19, you didn't start on 1/1. Okay. Then you do need to get out your last 941. Okay. It says amount to the most recently filed form 941. So for many right now, April 15th, it very well could be that you're putting in your 1231 amount there reported on line 2. Okay. Enter number of employees. It says see instructions. Here's what it just comes down to. On the most recent 941 that you have, put that down. Okay. Then you already have your number. Okay. We're not doing these other credits because they don't even exist until April 1st. Okay. Can't even do it. You can't do 5 or 6 because it didn't even happen. Okay. So for first quarter employee retention credit, you're putting in that. Do you want someone else to discuss this? Put their info there. Okay, you're going to have to sign and date the owner, the responsible party, right? Print their name. And then if someone's paid prepared this, they're putting in that info. And then yes, you fax it. You literally fax this puppy in. Okay, fax it, get yourself a confirmation. All right, and if you have any questions, you go back to, you just go to the IRS website. Whoops. Go to the IRS website and you just put in form 7200, and right there next to the form is, where am I at here? Instructions. Okay, there's the instructions. So you want to read through that, you can, right? But at the end of the day, here's what you're doing. You're going to get yourself this report. You're going to put in what it is. Here's what you paid them. There's no magic here. It's just what did you pay them? I mean, in a perfect world, if you had a payroll period that ran from March 13th to March 31st, you were 100 or less employees, you're going to take the gross compensation paid in that time period, if you had a time period that encompassed those 12 days, those 12 work days, or I guess if you have employees that work the weekends, that entire amount times 50%, bada boom, bada bing, that is your credit. Okay? And then none of these people here are over 5,000, right? So you're just getting that full amount. Then you're going to fill out that form 7200, right? And then you're going to fax that in. All right, so there's the Form 7200 employee retainer. No, employee. It's ERC. What is the dang thing? Employee retention credit. Okay, employee retention credit. First quarter 2020. The sick leave and the Family Medical Leave Act that it's expanded took effect April 1 and after, so you don't have to worry about those. So now if you're doing a 7200 for second quarter or after, then if you're taking those other tax credits, okay, from the Families First Coronavirus Tax Act, okay, the days that you're taking the credit for those items, right? So if you're paying somebody and you're going, well, on this day I'm taking that credit, then that's the credit you get for that day for that employee, okay? Which on those other credits, it's what you paid them up to 200 or 511. So most likely, if they can qualify for those other credits, you want to take advantage of those other credits because those credits are, in essence, 100%. Of course, there's this cap, right? What are those other credits right quick? So if you've got the sick, right, that means they have COVID, symptoms of, under quarantine, told to quarantine. Okay, that's up to $511 a day of comp that you can pay and get a credit for. Now, if they make $12 an hour, you ain't getting $511 You follow? It's the lesser of. Okay, if you pay them, you know, $1 million a year, then it's going to be a max $511 a day that counts. So it's the lesser of what you paid them for the day, and 511, lesser of. 10 days max. Okay. Now, if you have somebody that's caring for somebody with COVID symptoms, caring for somebody under quarantine or told to quarantine, then it's max $200 a day. So you pay you're going to get a credit lesser of what you paid them, or $200 for 10 days. Okay. Now, if they're home because you have an emergency or a health emergency and they've got a kiddo under 18, okay, and they've got to be home and you're paying them, you get a tax credit. It's up to $200 a day. So it's the lesser of what you pay them, or $200, max 10 grand per employee. Okay. So if you're using those credits, which you would want to do, because that's 100% of their comp. Okay. 100% just based on days, and the other one based on dollars. Okay. Then take those credits first. Okay. But then if you've ran out of those credits for that particular employee, then the time after that you can be taking, if qualifying, the employee retention credit. And then remember, once we're out from any kind of a government shutdown from COVID-19, you have the provision that if your gross receipts drop below that 50% compared to the quarter in the prior year, you're going to be able to get that employee retention credit. The employee retention credit you can get in advance. Okay? Read up on the instructions. Okay? You can get it in advance. What's that mean? You don't have to wait till the end of the quarter to get the credit. You can say, hey, we need this money. On any of those credits, when you go to make your payment for payroll taxes, the employer is getting ready to say, hey, here's the taxes that were withheld, Social Security and Medicare and federal. And then here are the taxes that had to be matched, right? Gather them all up. Okay. Now the employer is getting ready to pay that to the IRS. Okay. These credits, the way you recognize them immediately is you reduce down what you're getting ready to pay by the amount of credit. Okay. So whether you have employee retention credit or all three of the credits or all four technically, right? You got 4 levels here. You figure out all what your credit is. Okay. Boom. If you're getting ready to pay in $75,000 in payroll taxes and you have credit of $10,000, then you just pay in 65 grand. Okay. You just take immediate reduction of what you're getting ready to pay in. And then when you do the Form 941 for that quarter, you would say, hey, here's what we owed, but we had this credit. That's why we only paid this amount. And that's how it gets all rectified. Now let's go into a situation where what you're getting ready to pay in is $75,000 in payroll taxes. Okay, we're talking payroll taxes, but you have a credit of $100,000. Okay, well, you don't have enough, so you can say, well, I'm not going to pay in the 75, but how am I getting my other 25 grand? Because I have a $100,000 tax credit here. then you go file that Form 7200, okay? But on the sick and the family leave, okay, you don't get an advance on that. On the employee retention credit, if you're in that quarter, you've got issues. You haven't even done the payroll yet, okay? You know that you're going to have that. You can do an advance credit on the employee retention credit if you are meeting the criteria. Now, I'll tell you this, April 15th, if you read the instructions, you read the law, it indicates that if you're getting a PPP loan, okay, PPP monies, you don't qualify for the employee retention credit. Now, me personally, I just would like the IRS to absolutely clarify effective what date on that. Okay, is it effective the date that you got the money in essence? And then if you're using PPP money, you just don't get the employee retention credit then? All right? Or is it no matter what, period, the end, if you get one, you don't get to take the employee retention credit, end of story? Or if you did take it, how's a recapture? All I'm telling you is this, okay? If you're getting PPP money, you need to pause and check with your tax professional, your payroll company, and say, hey, what are the repercussions? I'm getting the PPP. What do I need to do? Okay? And right now, what I'm telling my clients is for first quarter, you qualify for the employee retention credit, but we need to figure out, is it just going to be a recapture where we have to pay it right back, or is it going to be a recapture as a reduction of the forgiveness of the PPP money? Because in the law, it does state the IRS needs to interpret this factor of that it is not eligible, or an employer is not eligible for the employee retention credit if they're getting PPP money. But they don't say an effective date. And there's all kinds of times that the law doesn't show an effective date, and IRS has to clarify it. And I know on the website the IRS says if you get PPP money, you don't qualify for the ERC. Okay, they do need to clarify the date on that. Okay, so hold for first quarter, right? And then if you are not taking PPP money, then yeah, go ahead and get your employee retention credit for first quarter. Remember, the big thing is you're going to mark it second, send that puppy in, and then now if you're in second quarter and you're not getting PPP money, well then you take these credits, right? Do everything I just said. But if you're getting PPP money, okay, it says in the law how it works with the Sick Leave and the Family Medical Leave Act expansion there, of how that works there. And in essence, you don't get the credit, or more specifically how it reads is, if you were to get the credit, it's going to reduce down the amount of your payroll costs, right? So if your payroll cost on the surface is 10 grand, but you got sick leave, credit of 1,000, okay, well then you're only going to have $9,000 that actually counts as payroll costs. So here's the deal. Make sure you're getting your credits, right? And with the great thing with Form 7200 is if you're unsure and it's time to pay the employer taxes, that's okay, okay? Because you can go back and get a catch up with the Form 7200, so you don't have to pause anymore. All right? So employee retention credit, Form 7200, pretty sweet. And what you want to do is figure out, though, if you got someone getting PPP money, do you qualify for that? If you qualified for it before you got PPP money. Pretty sweet deal, though, right? Pretty sweet. 50% or whatever you pay, whether they worked or not, 100 or less employees, whether they worked or not. That's true. Everybody was rocking and rolling and working their butts off from March 13th through the end of the month of March, okay? You're getting a credit for what you paid them. Everybody was home, feet up, go home. Same thing. You're going to, whatever you paid them, you're going to get 50% credit, whether they worked or not. If you're over 100 employees, they have to have not worked to get that credit. Pretty slick, but be aware on the PPP, it's April 15th, 2020. So hopefully that'll be resolved. Hopefully the IRS will come out and make it clear. They do still have to do some clarification on this because the IRS is directed in that law to do interpretations and regulations specifically if somebody were to take the credit and then get PPP money. So we haven't seen anything on that. And when that comes out, I think then they'll be made clear an effective date on this ERC. All right. And then I'll just say as a last note, if somebody can get ERC, okay, for first quarter, and it does turn out that it's a reduction in the forgiveness ultimately from the PPP money, you may still want to get it from the standpoint of if you qualify for $75,000 for PPP, but you can get a $10,000 ERC credit in first quarter because you qualify. So you get your 10 grand, you get your 75 grand for somebody that's starving for dollars, okay? You got $85,000, okay? It's not a double dip, okay? Because the credit is on first quarter where you weren't using PPP money. It was your own money as the employer. It was your own money that you used in first quarter, okay? There's not a double dip. You spent the money for first quarter. You're getting a credit for what you did in first quarter, okay? Then you get PPP money, okay? Well, that's second quarter. That's on the future, right? It's I got the money and then it's 8 weeks to come. You haven't happened to you yet, okay? Unless you already got your PPP money. So to me, it does seem as though you should get the credit for first quarter. And then if you're using PPP money, you wouldn't get it for second quarter, or you wouldn't get it from sure once you got PPP money and after, because it's not a double dip, okay? There's articles saying it's a double dip. It's not a double dip. A double dip is I got PPP money, and during that period of using the government's money to pay employees, I then also took an employee retention credit. That's a double dip, okay? It's not a double dip to get PPP money to pay the next 8 weeks of payroll, and if I got a credit for payroll I paid in the past. That's why I just think maybe it doesn't have to be a one or the other. Or if it is a one or the other, do you get the credit and the recapture as a reduction in the loan? Well, for some clients, okay, it's just a reduction in the amount of forgiveness. I still get it. I still qualify. Not going to take me away in cuffs over the thing, okay? So for those that your mind's just boggled and you're just, whoa, what did he just say? What? What I said is we're going to wait and see instead of just making a freaking decision and freaking out and our minds are blown because we're just going to wait on the freaking IRS. All I'm trying to press on you right now is that we don't have, as of April 15th, full clarity from the IRS. Okay? So once we have full clarity, then we'll know what to do with first quarter. Cross your fingers. Okay, but I'll tell you this right now. If the clarity comes out and they say, hey, if you qualify, you take it. But if later you get a PPP, you're going to have to recapture it by there being a reduction in the amount of your loan forgiveness. Okay, well, you still may want to do it. Why? Because I need money right now. I have a business that is dying. Okay, we're not in a textbook running numbers going on. Well, gee golly, I mean, why would you do that? You're just going to have to pay it back anyways. Okay? Get out, because you're not dealing with real life and you're not on the phone with people that are sobbing and freaking out about how they're going to make ends meet and put food on the table and pay rent and pay employees. Get out of my ears. I don't want to hear anymore. I don't deal with scholars. Okay? I'm not in a classroom. Okay? I'm dealing with clients that I know who their kids are, and I go to their games, and I've worked with them forever. So if I'm going to find a way for them to get an advantage, okay, I'm not talking about robbing a bank here, okay? What we're talking about is, do they qualify, yes or no? Yes. That client qualifies. Yes. Law says that if you get a PPP, you don't qualify. Okay, but when? When? Tell me when. Well, since the beginning of time. It doesn't say since the beginning of time. Okay? Maybe it's going to be ultimately that, but it doesn't say that. Okay? So let's just go for 1 second, okay? That law comes out on the 27th. You know that you can take it. Boom. 7,200. Bum, 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 bum. Here comes the credit. And then you go, I don't think I'm going to get, I don't know. Are we getting 7,200? Yeah? I mean, are we getting PPP? I don't know. Are we getting PPP? Who knows it? What are we doing? And you go, yeah, you know what? Let's get some PPP. I still qualified. I properly got the credit. Okay? Then I decided to go get some PPP. The IRS needs to define what happens in that. Okay? It's not, you're under arrest. You have the right to remain silent. Everything, it's not that. Okay? Get out of here. Okay? I'm dealing in the real world. JJ the CPA wants to have all the facts and circumstances, not a Fortune magazine article or Forbes or someone just typing up, you know, they're just over here and like, hey, what do you think? And then the partner says they wrote it and they did it, and some staff and another senior wrote out it, and then here comes a picture. Okay? Get out of here, okay? Why are you writing articles making conclusions like that? You know, the articles that I appreciate and respect are the ones that say, here's the analysis, here's what it appears to say, but we need more IRS clarification to know how it is. Because technically you can do all things. Technically you can do all things. Don't tell me different. Okay? Look at the law. Read it. It says right in there. If someone qualifies and they take it and they later get a PPP, IRS needs to tell us how does it get recaptured. It doesn't say, woo, woo, woo. You're under arrest with a SWAT team out front. Give me a break. All right. Boom. Here's the deal. I work in the real world with real clients, with real issues, with real taxes, with real dollars. Okay? I'm not in a dream world. Okay? I'm not in an ivory tower, and I don't know who my clients are. And my job as JJ the CPA is to make sure that my clients are paying no more and no less than the tax they're due. Not just because I say, because I'm going to follow the law. Okay? The law is incomplete. Read it. It's incomplete. Read it. Okay? And your comment is, well, I read it. I read it. I read it. I read it. Do you read English? Do you know how to read English? Okay? Don't tell me that you do when you read that and it says that the IRS still needs to define what happens when you do that. Man, this is why I've never had an IRS adjustment 27 years. Okay? You know who has IRS adjustments? People that read a Fortune magazine article, or they read it, you know, someone said this, someone said that, oh, the IRS said that. They rely on the IRS website. IRS website has this much authority. This much. Okay? If you're a yahoo that goes by that only, okay, a professional, you go by that, and then you hand this over here to the agent that you're getting an IRS agent, you're going to get laughed straight out of that audit, and you should. Okay? Now, here's the ones I respect. Okay? Got a few CPA, you know, we're comparing notes and different articles. You got to look at articles, right? You're looking at articles to try and figure out, how does this work? How does that work? What are they saying? What are they saying? I've done all the same thing, and I appreciate. We got CPAs who are back and forth. It's like, well, JJ, I don't think you should be able to do that and this and that. And it's like, great, but we're still figuring it out together. Okay? Just because somebody initially is like, you know, I just don't think we can do it. That's cool. So allow me to have a little free speech to go, well, maybe we can. Right? You've probably seen other videos and I talk about the stop sign, right? JJ the CPA doesn't drive up to a stop sign and then stops. I mean, think about this for 1 second, okay? How do you run your life? Okay? Do you come to a stop sign and stop forever? Because it doesn't say what to do next. Okay? And the reason I'm going off on this is that get yourself a tax professional that says, it doesn't seem like you can, but you know what? You qualify for it. I followed the law. I'm reading this. We need more IRS interpretation. Let's just hold. Because we might be able to do that. Or you do want the one that's like, well, you know what? 7th inning, down by 10. You know, you guys want to beat traffic? Let's just head out early, you know, beat traffic. That ain't who I am. Okay? I'm there to the bitter end. Okay? Making sure. So be a preparer like that. Be a tax professional like that. Okay? There's nothing wrong with just saying, yo, clients, I think we might. Let's hold. Okay? And more words from the IRS on their website still doesn't mean jack anything to me. Okay? It gives me an indication. I mean, let's look right here for a second. Like, for real. Look at this right here. Okay? I love you if you're still here. So, let's go. I'm going to go back to where we were looking. Okay? Check it out. Let's see if it's right here. Let's go. Here we go. You ready? Where's it at? Come on. Making me look bad here. If we go here, okay, I'm going to prove my point to you that there's just human beings that work at the IRS, okay? They're not terminators, right? I used to think I was John Connor, but these are not Arnold Schwarzenegger individuals that are working here. So let's go. Come on, Jiminy Christmas. Employee retention credit. Just hold with me for a second because this is important. All right, so we go here. Recommendations, instructions, the relief. What's the deal here? Economic impact. It's going to be worth it to see it. Let's go. Instructions, print. This is ridiculous. See, look at the IRS doesn't even have this all the way down. Here we go. This we got. Just stick with me. I don't know why it's not coming up. Okay, check it out. You ready? Look at employers with employers with less than 100 employees. It says if the employer has 100 or fewer. Well, which is it, IRS? I'm not picking on the IRS, but which is it? Is it less than 100 or is it 100 or fewer? You follow? Okay. Just because the IRS website says something, I mean, bless their hearts, they're trying to keep up, and here's this and here's that and here's how this works. I get it. Okay. Okay. But is it 100 or 100 and fewer? It's pretty darn important. Is it due on April 15th? Okay. Was it due on or before April 15th? Right. Take the vehicle. Right. It has to be over 6,000 pounds GVWR to get code section 179, right? So here's how I look at it, okay? For you tax professionals out there, okay? When's the last time you told your client when they're getting that vehicle, which by the way is total BS that clients that are doctors are writing off freaking SUVs. It's total BS. And if you're paying attention to the new tax law, it doesn't qualify anymore. You look under the transportation difference in the rules and the employer doesn't get to write off the qualified transportation expenses anymore. It is still not taxable to the employee, but it's not deductible to the employer. Boom. That crap goes away, okay? You're giving your doctors a free ride or the driving to their office and back, okay? Under the old law, we could do it. On the new one, you can't, okay? Nonetheless, okay, they go and they get that $79,000 SUV, okay, it's over 6,000 pounds. What happens with Section 179 if it drops below 50% business usage? What happens? Okay, you recapture all your prior depreciation. How many of you ever in your entire career told a client, and I'm not kidding around, when have you ever done this? Okay, you told a client, hey, listen, I'm just going to tell you right now, you're putting that SUV in the business. Okay, so we're going to, we know it's like 85% business use, okay? But boy, if that ever drops below 50, you're going to have to recapture. So you're not taking it. You're not going to take it because one day you're going to have to recapture that. Okay? Do you tell that when a client buys some real estate? Hey, listen, I'm going to tell you right now, we can depreciate that. We can depreciate it, but when you sell it, you're going to have to recapture that. So we're not taking no depreciation because you're going to have to recapture it. Why even take any depreciation if you're going to have to recapture it? I mean, you just have to give it back. Right? I mean, why even write anything off? Because you're just going to have to give it back. Right? I mean, do we not all the time with our clients tell them to take depreciation knowing that when they sell it or at a later date or less than 50% usage, they're going to have a recapture? So get off the high horse, okay, about well, I just don't know why you're telling anybody to do anything that's going to recapture anything. Well, then why are you telling clients to take depreciation? Why are you telling them to take Section 179? Huh? You know why you're saying it? Because on the IRS website it says if you don't qualify, you don't get to do it. It says right there in the law, you okay? That's not how I roll, okay? JJ the CPA doesn't roll based on that. Doesn't roll on if this, you don't get to do that. Okay, when? Right? Is it 2000 BC or is it 1 million BC? Okay, because it should say there. It should say a date. Okay, demand a date. Now, if it never gives us a date, then I'll just be in a holding pattern. Because guess how long I have usually to go back and get ourselves some credits? What, a couple years, right? I can wait. Can you wait? Yeah, you can. There it is, 7,200. If you stayed till here, I'm amazed. And I appreciate it, and I love you. And we're all getting better at this, okay? Every day we're working through this. It's tough. It's hard, right? Stuff's coming out. And like, how many times with the IRS code, when stuff comes out, that this much dire, straight adjustments and help or hurt to our clients, does stuff coming out this quick apply to our clients that quick? There's new laws that come out. It's like, shoot, we got to figure this out. It's only got a few days before the end of the year, or it's retroactive. How do we work? Boom, 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 boom. But our clients aren't typically in dire straits to then figure it out and then apply it. I have clients in dire straits. Okay? If I can get some money in their pocket and they got to recapture it later, the same as if I can get them a deduction and later they're going to have to recapture it, but I'm getting them a deduction now, or I'm getting a deduction in a higher tax year. Why wouldn't I do that? Okay? Right? So we don't prepare returns just based on what our emotion is, what we think. Okay? You don't tell a client, well, the IRS said no. You should never tell a client that, because the IRS doesn't tell us anything. The IRS interprets. What you should say is Congress said no. Okay? And really what you should say is, well, the law allows us to do it this way, but if we do this, the law doesn't allow us to. Okay? Stop. I mean, if you're still listening, like, I just think, stop telling your clients. You just make, no offense, you make yourself look weak. Or you don't know how to tell the client with authority that they're not allowed to do something. Okay? I don't think I've ever said to a client, well, the IRS isn't going to allow you to do that. IRS flag. And bring it on. Who cares if we get an IRS audit? Who freaking cares? Okay? The rule book is right there, irs.gov. It's right there. It's right there, Jiminy Christmas. How about you just do things right? How about you follow to the letter of the freaking law? And when the IRS agent shows up, you go, hey, boom, you want this? Here you go. You want that? Here you go. Boom, boom, boom. Got an adjustment. Everything good. Here we go. Rock and roll. Okay. You know who gets audit adjustments? Okay. If you're not a tax professional watching this, okay, you know who gets audit adjustments? The ones that say, oh, the IRS don't let you do that. You know why? Because they don't really know what the hell they're talking about. They're just throwing down the IRS because that's the only way you're going to they're going to be convincing you that you can't do something. Okay? Because they don't really understand it themselves. They just went to irs.gov, they looked here and they're like, oh, you can't do that. Okay? Because that person right there goes, oh, it's less than 100 employees. Well, we get to do that. It's more than, less than. Well, what if it's 100? Well, that doesn't really matter if it's 100. Well, it matters to JJ the CPA because I'm going on, is it 100 or is it fewer than 100? Okay? You get it? Right? I mean, what are we doing this for? It's to save our clients money. Okay? And that takes time, and it then takes money for your clients to pay you for that. Okay? There's no reason to rush through something, then go, hey, I got you a credit, and so I'm only going to charge you $75 to do it. Okay? I'm not saying that you charge them $7,500 when it took you 2 seconds, right? But know what the hell it is that you're doing so that you can give the best answer to your client, because it's the best answer that you came up with, not the IRS website. Okay? Now, no offense, okay, if you're just doing this part-time, right, and you don't really care, right, you probably don't have clients that are doing this kind of stuff, right? No offense. I'm just saying, like, if it's just kind of a hobby, you hop in, you do a few returns, you got some buddies, you know, hey, bring it on over here, you're in turbo. This stuff doesn't apply, right? Who's this apply to? People doing business returns, okay? But I'm going to just tell you this, be honest with you, okay? There are a ton of people out there that are doing business returns, and it's total crap. It's total crap. Now, one thing my grandfather taught me is you don't ever talk ill on another fellow CPA. I've added to that EA, okay? So usually if a client comes and it's something was missed or whatever, it's like, well, I mean, probably just didn't communicate well with your CPA, because by golly, you have a responsibility in this too, client. You know, how do we know what you did? You got to tell us. So your CPA probably didn't know, your EA didn't know. And you walk back and you're like, what in the hell were they doing? How did they miss this? How did they miss this? This is ridiculous. You know why? Because that person probably read the IRS website, or they had a staff do it. They didn't really pay attention, right? And what they were worried about was, I got an article out. All right, been fun. JJ the CPA here, doing the best that I can. And I know you are too, because if you watch till here, you are one of us. You're one of us. All right, JJ the CPA out.